What's going on, everybody? How y'all doing? Can y'all hear me all right? We'll get going in a second. Let me know if you guys have any questions. If you're in the Discord, put those in the Discord. We'll prioritize those, but all the other ones, right? You can just drop them in YouTube, drop them in Twitter, wherever. It should pull up on the software we're using. Go from there. Oh. Damn, where's my... Not too much going on here. Oh. Hey, Paul, how you doing?
All right, bud. How are you?
Right.
That was a hell of a run you did today.
Hey, just normal Sunday. I had a 2-hour run on Saturday too, so a little dead legs action, but it was all good.
Oh, that's great.
50K ain't gonna run itself.
That's a fact. Hey, Mike.
Hello, how are you?
Good. Happy holidays.
Yeah, thank you for
Happy holidays.
Thanks for doing the holiday spirit for us, Mike.
Hey,
Hey, I can go. Mine's inside. I can go get mine if you want.
You change the Discord, I put on the hat. So
yeah, I don't think I have a Santa hat. I'll ask my wife, but do we have a Santa hat?
balls are running.
And Mike, I just did a little 26.5 mile run a day.
Ooh, nice. Nice. You need the Grinch hat. That's what you need. Nice. You good? Are your legs like quivering? Are you good?
No, they're fine. I mean, I've been training for it for a while now. So, yeah. I mean, human body is amazing. How it adapts. But yeah, like when I ran the marathon the first time in October, like I couldn't move, but like I'm just fine now. So,
Chuck, we'll check on it. I think you mailed it to him, didn't you?
Yeah, looks like you scheduled one for Monday.
There you go.
So we can get to that.
Yeah.
Sweet. All right. We can get going here. So we could probably just look over market trend model real quick, seeing if there's anything in the structure. We can look at SPX where it's opening up. Then Paul, I think people are dying to get a little bit of an overview of the spaghetti models, which are the
yeah.
That's what I call the SPX.
Yeah, speculation models.
Yeah, the speculation model. So if you're feeling up to it, to just give a little overview that folks can go back and watch.
Sure. Yeah, let me get a few of them open.
They'd probably like that. So yeah, while you're doing that, I'll just go over a couple things real quick, I suppose. So setting the framework here real quick, right? Open at SPX 65.80 is where we opened in the pre-market. Keep in mind, holiday shortened week, generally, lower volumes, but nonetheless, I think we have a full day Monday, full day Tuesday, full Christmas Eve. I'm not sure, to be honest. Maybe someone in the chat can let us know probably Christmas Day closed, Friday probably a half day. But nonetheless, right, be diligent. Just understand, right, what your positions are at the end of each day, what the end of the trading sessions are, all that good stuff.
Yeah, early closed on the 24th at 1 o'clock Eastern time.
Okay, yeah, that makes sense. Really, just looking at Friday structure really quick, we can go back and look what the over the weekend is. Keep in mind, over the weekend's not going to have the OCC updates, which we will get in the morning. All brokers will get that in the morning, actually. But right, 60, 80, 68.50, right, was the key of our transition zone. Key kind of upper level, which we are flirting with that right now in the pre-market. So just be cognizant of that. Speaking of the web app, a couple things want to bring to your attention. Why do I not have only have? First off, right, we've made a couple, well, ew, what is this? Crap. Okay. First off, right, we've made a couple of changes over the last couple of weeks. We got Charm in there, we have Vanna in there. Those tie the NetStat commands, so it's just a very good visualization now of all four of the different Greeks, not only from a NetStat point of view, but then you can kind of understand, okay, that key strike makes sense, why it's the key strike, looking at the aggregate above and below spot price, looking at the clustering of all that good stuff. You can easily see that. We added these subtle highlights here so you can just kind of see plus and minus GEX easily. This magenta box here, this is the expected move. This white box here is GEX transition. Something New Year we'll focus on is getting DEX and the transition zone. Expected getting the DEX and drunken sailor transition zones into the web app. Right now we draw those manually every morning, but those algorithms are a lot more robust than obviously expected move and GEX. So two things, hopefully first quarter, we're going to get to those. A couple other updates for you right now. You have the customization of the colors. So right, we have high contrast, we have colorblind friendly in there, and then you have the option of customizing the positive and negative values to be whatever colors you want it to be. So have fun with that. The other thing that we're working on in stage right now is adding kind of a little bit of a heat map component to the expirations. Reason for that is so we can kind of understand, right, where the key strikes are at, just in terms of speculation. And then, kind of based off of what you selected, you'll see kind of the percentage of open interest of what you have selected. So, kind of when you're rifling through the expirations and all that good stuff, doing your analysis, just so you're able to kind of see where the expirations and kind of open interest is in speculation really is sitting amongst the structure. So hopefully we get that pushed out pre-market, but obviously we'll keep you guys alerted when those changes do get pushed out. So looking at the market trend model, right? Obviously last week, last Friday into this week, we had a downtrending market trend model that persisted for much of the week, right? We ended the week still relatively weak, right, on a long-term basis. I guess we saw a little bit of improvement Thursday into Friday. We have the railroad tracks moving higher. We have the cumulative tick, technically moving higher. It's above the railroad tracks, right? But, it's flirting with the longer-term moving average grouping. Yes, it's on the right side of the cyan longest-term moving average. So that is step one in kind of a trend shift, right? Step two is getting above the red moving average, because what that does then is that's a key gate in our two key strategies at GammaEdge, right? The P transit plus GEX, 100% mechanical strategy, and our wheel strategy, signaling new entries. That bullish momentum indicator, for lack of a better term, right, needs to be on TC3, TC4 for those in the Discord. That's our tag combo system. That's what the above the cyan and above the red moving average is to activate those. So that's what we're going to be watching into this next week, and then right into the first of the year. seeing, right? Very fragile. We easily could continue to waterfall lower. That's where understanding spot price, where we're trading in relation to the transition zones, is very important too. If we're in the middle of the transition zone, if we're below, if we're above the transition zone. So yeah, and then we had a little bit of filter tick buying on Friday. So net, that is good to see, as opposed to just looking at the magnitude of the selling we had earlier in the week. Obviously, the magnitude of the buying was a lot less. So, take that for what it's worth there. So yeah, I don't know, Michael Paul, you guys got any other thoughts on the market trend model as it stands right now?
I do not.
Okay. The other thing I wanted to note real quick, I know we're talking about tools a lot, but you guys kind of implicitly agreed to that when you showed up to this, and we're rolling a lot of new stuff out, right? This is the trading view market trend model, right? That is going to represent the short-term moving averages and the cumulative tick. You're not going to get this longer-term moving average, but that's okay, right? We stream in the Discord. We post screenshots throughout the day. We always have a pre-market screenshot, and so that should be good enough. Obviously, you're not going to get the filter tick, but again, we are streaming that throughout the session, so you can clue into that as well. But you really get kind of those key components we're looking at anyways on an intraday basis, and then kind of a swing trading basis, right? And so you can understand the green and the red is going to be your cumulative tick. And then we have the various railroad ribbon components there as well. So, a lot of people are asking to get this in Trading View. We have done so. So it's available in the Discord. The only thing to note is you need to be on the 1 minute time frame for this to work properly. So just keep that in mind. Or yes, or less, 1 minute or less. So just keep that in mind. So yeah, that's kind of where we're at right now.
Yeah, the next release will be coming out this week. It's a version 1.1. It has alerts turned on, and what you'll be able to do is, if you have alerts in Trading View going to your desktop, if you have alerts going to your mobile device or to your email, you'll get notified on, see each one of those tags right there that you see below. Tags.
Yeah.
You'll actually get alerts on those for whatever ones you enable, and that'll push out. And I had it working Friday, but I just wanted to make sure, because we're in a new uptrend, or at least short-term uptrend on Friday. So we had a lot of new signals being generated, and I just wanted to make sure that everything was working fine.
Okay, awesome. That will be great.
Yeah, and that is, we won't talk about it tonight per se. It's really for the Discord, but we do have an R&D strategy where you can play SDS or QLD, QID, for the UX ETFs. And actually tying them into these crossings that you see here can be a way to get progressive exposure to one side and start peeling off some of that exposure to the other side. So some nuances in there. Like I said, we won't get into it tonight, but happy to engage. We have a channel dedicated to it in the Discord, and happy to engage in the Discord for those who want to do
that. Okay, awesome. Yeah, I'm sure the folks will be looking. Let me go to this one more. All right, sweet. So I guess looking at SPX structure, we have the full complex turned on, right? This is SPX as opposed to SPXA. SPX is the right combination of SPXA, SPXP. Looking at the SPXP specifically here, 6850. That was the key kind of transition zone on Friday. Looks to be key transition zone as well. Right now, 6845, 6850. Obviously, keep in mind that we'll be getting the overnight updates tonight, which will impact 0DT tomorrow. But kind of cumulative looking at all the strikes right now, it's not too different from what we saw on Friday. Thing to note: below spot price, have a little bit of alimony put speculation ideally in a perfect world, we have in the money call, out of the money call speculation above and below spot price. But I mean, that's not crazy to see, just given kind of what the market trend model had been doing in the downtrend and whatnot. So, yeah, I mean, really from here, we want to see the market trend model continue to expand higher. Want to break above the top of the transition zone. Want to see those out of money calls continue to come in. Want to see this out of money put speculation get cleaned up as well. Or if you're a bear, right? If you're a bear, you want to see a continuation of this waterfall, the market trend model on an intraday basis. Melt lower. You want to see filter tick selling come in. You want to see new lows outpacing new highs, like we saw on Friday, Thursday, on Wednesday, on Tuesday. And then you want to see, net delta, red column, in the money, out of money puts coming in, trading below the transition zones, all that good stuff. Paul, Mike, anything else to add on that?
Nope.
All right, cool. So guys, that's kind of, lay of the land as it is right now. If you guys have any follow-up questions, you want to look at individual tickers, we can do that. But, we like to do educational parts of this as well. So with that, I guess, Paul, if you want to, educate us a little bit on the couple new commands that we've introduced the last couple weeks.
Yeah, sure. Let me think of the easiest way to do this. Let me present.
Yeah, just share whatever screen you want to, and I'll add it to the stage.
Yeah, I think let me figure out which one I want here. Let me see what screen 2 comes up with. Yeah, that'll work.
Show in the Discord?
Yeah.
Perfect.
Yeah, so we introduced, we put it into production, I guess. We introduced it actually a couple months ago. This concept of where are the speculators? And why that's important to our trading is that when we go back, let me just go back in time on Monday or on Friday, just so we can get kind of a sense of stuff. There are a lot of charts here, so let me just see what we can go back in time. Well, I won't waste your time here. Let me just show you kind of what's happening here. First of all, many of you are aware of this chart, right? We call this the volume or the volume momentum chart. And this chart plots on a 5-minute over 5-minute, literally the distribution of what is happening in the market with a particular symbol. In this particular case, this is the SPX, and it's a 0DT, so it's the SPX. Everyone knows it as the SPXW. We actually call it the SPXP for PMs. So this is the SPXP because it's a single day. And what you're looking at here is you're looking at the middle of where speculators are sitting. And we don't have to go into it right now, but many of you are aware it looks like a bell curve, right? And the center of that bell curve is the price that you see right here. And we do this for both strikes, which is here, and we do it for volume on a 5-minute over 5-minute basis. Now, why is that important in the big picture? Well, typically people, when they're placing their bets and we're down here in spot price, they're speculating 5 delta, 10 delta, 20 delta, whatever the case may be, right? And this is what is represented by literally the voting machine in a 5-minute over a 5-minute interval. And so we do some back office stuff with that volume. We crunch it, and we plot what are called the centroids. And the centroid for those of you who are mechanical engineers, you're probably smiling because you're looking up and down saying, I know what a centroid is. Centroid's the center of mass. And so if you have a bell curve, you can find the center of it, and that's effectively what we're doing in terms of strikes and volume. Right? So we do that for the calls, we do that for the puts. And then we put a straight line to it. We call these the chopsticks or the lin fit lines for linear fit lines. They go by many names throughout the day. But you'll see the endpoints kind of tell us if the market continues on the path that it's on. This is the range that it's probably going to close in. This is where the speculators are. And you can see it's almost horizontal in this particular case. Well, what we have found is that the markets can change intraday, and we tend to get that line on both the call side and the put side. It moves up and down. And so we got a lot of feedback from folks saying, hey, this is really good, but can we have something that's adaptive? Can we have something that kind of shows how the market is changing? And the answer is yes. So a slope or a line, the slant of that line is called the slope. And we can plot that slope. And the puts are right here. So this is one of the tools we introduced. That slope of the put line, right here, put speculation slope, is right here, and it's coming down. Now, what does that mean? It means it was very, very positive, angled really steeply, but as the day progressed, it started coming down, never hit horizontal. A slope of 0 is horizontal. It never hit 0, but it kind of abated as the day went on because the market was probably presuming we would sell off later in the day. It's been kind of the modus operandi for the market to, rally in the morning and sell late in the afternoon after the profits are made. And so we had this. And this just indicates most likely that puts were coming up closer and closer to spot price. We have another tool that we're going to look at that we just introduced to look at that. Now the calls, on the other hand, the calls sold off, right? They went negative early in the morning. That's what this is telling us, right? So 5 minute over 5 minute, market participants were actually pulling their calls down. So, whatever spot price was doing early in the morning, and you can see it was going up and then it started coming down after 10 o'clock. So let's just look here at 10, right? So 10's right here and it started coming down. We start the slope chart at 10 o'clock, and it was coming down, okay? So calls were starting to come in, and people were thinking two things here. I can sell above it, because if price is going to start pulling away from that, I can sell a call credit spread. I can do lots of stuff above where these prices are. So this gives us visibility to where price may not be going. But here's where the tool comes in. You can see at about 10:30, 11 o'clock, it kind of stabilized. It was still pointing down, but then it started to slowly drift up through the day. Not aggressively. 0 is flat, right? So it never went like this again. But instead of being steeply down, which is where it was here, it started to abate and then finally started to go kind of horizontal. What does horizontal mean? I mean, how do we look at what horizontal means? The horizontal nature of that, just kind of putting it into the big picture, horizontal. If I were to click on this chart right here, each one of our charts is, let me know if you can see this. Can you see this one right here? Hang on a second. Sorry about this. Looks like the chart disappeared. Let me see if I can grab this. It is not opening in the screen for some reason. Yeah, for some reason it won't open on the screen. Anyways, what we can do is you can hover over on when I'm not streaming right now, you can hover over this and you can see it's right at about 68.50. That's where the base of this thing is. So horizontal, you can see it says 68.45. So horizontal line, 0 slope means probably not going above that for the day. Well, as it turned out, that was true, right? The tool worked, and the market kind of held its ground. How do we know that? Remember those centroids that we were talking about? They're a bell curve. And when something's a bell curve and you're plotting it 5 minute over 5 minute, we can ask the question, where is it all concentrated? And you can see that in the first, I don't know, hour of the trading day, everybody was stacked right around 68.50. Everybody, 50% of the distribution. This is the spaghetti lines that Taylor asked about earlier. 50% is this, what we call C50. All the trades are right around this area. Now the yellow line is the 10%. So 10% of the speculators are on this yellow line or below. Now why is that important to us? Well, if the price is down here and they're placing their bets, 10% of those bets are at 40 and below. This gives you the early warning range where monetization is going to start taking place. Could start taking place. Doesn't always end up that way. But what tends to happen with these charts, and it's pretty cool watching during the day, watching this thing unfold as price starts moving up for whatever reason, speculators, intraday, a lot of things going on. You can see just as we got to what we call a monetization zone, or the C10 area, we pulled back. And when you close long calls, you're removing long deltas from the book, right? Your book's getting shorter, the dealer's book is getting longer, and all things equal, the dealer has to sell. The market starts pulling back. So the pressure is to start coming back. So we're going to take another run at it, right? Because speculation's not changing. There's still people up there. These lines aren't really moving. We're going to run it up there again. Boom, we hit C10 again, start seeing some pullback in price. And if we start taking a look at what the slope was doing, you can see that it was just going horizontal and not really changing. And this was the final range that we had for the day. So here's the takeaway with this tool. When you start seeing this start to converge down, these are the puts, right? So very, very steep slope positive, starting to abate. If you're selling down below in this particular area, you might get some heat there. You might get some pressure there, right? Because the slope is starting to come down. They're starting to transact a little bit lower. And you can see how this was starting to evolve up. So depending on where you were, if they continue to open puts up, that can continue to pull price down. So you actually want to sell up in this area. Go where price isn't going to go. And that's what the slope chart can tell us. Same thing here on the call side. It was looking like it was going to come down. So I would want to be a seller above. But then it started to reverse. Well, I don't want to get run over. So then I go to this other chart, which we call the absolute chart. And it's telling us most likely we're not going to go over the 50, 45, 40 area. That's where 50% of all the speculators were for the day. So if you can get the premium you want, selling above the 50, the 55, 60, go for it. That's exactly what I did for the day. So, and it was all posted and all that stuff. So you can use these tools to get an understanding of where the speculators are. And then knowing where you have, we had a key level at the 20 strike. It was our drunken sailor upper. And once we cleared that, I went long with, according to our plan that we had in the morning, knowing that we had a good runway at least up to 35 to 40. And this confirmed we had a runway at least to 40. And so if you went long, according to the game plan, above drunken sailor, which is our normal way we do things, then you could have picked up 20 SPX points pretty easily, and you knew where to start where the monetization was likely to occur. So there you go.
Yeah, the other key thing too, Paul, is connecting it with you connect it with the levels there a little bit too, but even like 68.50, right? That was the key upper bound on the day from the SPX game plan, right? That was plus GEX, COI, all that good stuff. Very tough to overtake that level. And when we saw, right, coming into the session, right, like kind of, game planning it out, okay, 68.50 is going to be a really hard level to overtake. And then we go to the vol in command, we go to the spaghetti models, and we see that like zero speculation happening above 68.50. It's all happening below. We have that flat top on the call centroid, suggesting zero evidence of any kind of upward thrust above 68.50. So again, connecting kind of that structure to how folks are actually transacting in the market is kind of a good 1-2 punch.
I think so. I think what the tool is doing for us are tools, right? I mean, we knew from the game plan setup in the morning, right? So for folks, just so you're aware, we marked these levels in the pre-market. This was posted at what time? 7:30 a.m. Friday morning, Eastern time, right? So 2 hours before the market opens. So we've analyzed the levels. Mike, gets his charts prepared for his 9 o'clock review that he does on YouTube. But you can see right here, we had a pretty key level here at 68.20. You can also see that we have a pretty key level here at 68.50. So what we do is we understand where these key levels are, and we're looking for confirmation through the tools, right? So we have the plan. It's just a plan, right? Nobody has a crystal ball. But when the market finally broke us north later in the day, after it was at 10:30 or so, and we started pushing upward, I think that really started to give us confidence, because here's that 68.20, right? We came down to 15, screwing with 15 again and again, and then we took off. And I could have taken it here. I didn't. I was talking to folks. I was thinking of taking it, right? And I also had a CCS set up here. It came back down. It held 15 again. And so as soon as it crossed 20, I stuck with the game plan, and away we went. So. Yep. Or maybe I did take this. I'll have to go back. The timestamp's on my screenshot that I put in the Discord, but one of the two. I was playing around with different trade setups, and it was all based on this. I mean, I don't use anything else during the day. I just use this stuff. So.
Yeah. Perfect. All right. Well, guys, let us know if that made sense, right? The vol chart, connecting that to these new speculative charts, and then connecting that back to the game plan, back to the structure, and how kind of, where the levels are, and then how folks are transacting and interpreting that, right? Because at the end of the day, that's how you're going to make money with this stuff, is being able to. It's really just a couple tools, right? And so, not asking you guys to look at a ton of different stuff, and it's all consolidated into one channel, really. So, Chuck, to your question about have it being live, or you got to run the command every time. No, there's an automated. Yes, you can run the command if you want, but there's an automated channel that Paul is showing you under auto channel category, where we produce all of these charts, and we do it in 5-minute increments. Reason for that is we played with a bunch of different slices, and anything below 5 minutes is going to be very noisy. Okay. And so you're going to, it's going to be very, very choppy, up and down. And so the 5 minute is a very good compromise. This originally started at 15 minutes, keep in mind. So this 5 minutes is a very good compromise. We have found, and most of the members using this have found, of a time frame.
Yeah. Yeah, and I think, the key takeaway here, so this is later in the day. This is that vol D. Remember that bell curve thing that I was telling you about earlier? So calls are above 0, puts are below 0. So if you think of that bell curve, what's the center of the bell curve, right? So every 5 minutes we're characterizing this, right? So you get a pretty good sense of what the market's doing. You don't need to look at this chart. Why? Because that chart is embedded in this chart. That information's here. So right there, we've just reduced one of the charts. You can go look at it if you want. We have a lot of data geeks and quants in the channel who want to go look at the raw data. Go for it, right? Ask questions. We make it available. You can run the charts. You can go down to the automated channels. Knock yourself out, figuratively. You don't need to. I think with the vol chart, and now with the additional tools, I think we're going to be able to go through and get a pretty good idea of what the market's doing, where they're transacting, and then how you're going to potentially set up and leverage that, right? you want to go where price, if you're selling, you want to go where price isn't going to go. You don't want to get run over. If you're long, you want to go where you are and where it's going. You want to get the direction right. If you can get the direction right, you can sell above or below, and you can go long above or below. We're helping you get the direction right.
Yep.
And then when you play that against the different levels, gamma levels, delta levels, charm levels, I think all the pieces come together. Let's keep practicing.
And I mean, candidly, right, there's a million different service providers out there that can give you, different gamma levels or whatever, right? But it's like, okay, cool. And they can tell you some cool theoretical thing about, oh, the dealer's like got to sell 1 billion futures here. But it's like, who cares? How's that helpful as me as a trader going to make money today? Like, it's really not, right? Because it's like, oh, the key level, they were supposed to sell 1 billion futures. Like, what happened? That's where what's actually transacting in the market, like, is what matters, right? Because there's the theoretical stuff that, you can talk about offline about what's supposed to happen, but then it's like, okay, what is actually happening? And then how do I craft a trade from that? How can I make money from that? So that's, where we kind of take it one step further, because at the end of the day, right, we built GammaEdge to make money and then, right, create a community around that so we can bounce ideas off to then create better tools to help us make more money consistently. And it's a flywheel. And so again, this is kind of a culmination of where we are to date about our best tools we have for 0DT trading.
Yep, indeed. Beautiful. Mike?
Yeah, Chuck, it's not necessarily the graph itself telling you go long at 68.20. As Paul talked about, the pre-market prep is very important to go long at the 68.20 based off the distribution of speculation, right, and the structure, and knowing that above 68.20 is a key level, and we have runway up to whatever 68.35 or whatever it was, and then that speculative chart is telling us that there is runway because there's really nothing going on above 68.50, right? So that's kind of that's how I would think about it there. Unless, Paul, you thought about it differently because you've been talking about the trade that you actually did take too.
No, and I said this yesterday in our notes in the morning, but I say it every day, right? Chuck, to your question, I think this is really, really important. You want, when the bullets are not flying at you, you want a plan. That's what the pre-market does. In the pre-market, 68.20 is DS upper and the 0DT DEX plus trans strike for the day. It will provide significant gamma slope to the upside if we can get above it. If we push above 68.20, then we're long with size at least into 68.40. This was written 2 hours before the open. So here we are. We're at 68.20, right? We took a little bit of heat down to 68.15, but it held. And I went long, just like I said in the plan. Why? Because I don't have to remember all the reasons of why I did the analysis for 2 hours in the morning. I have the plan. I'm not going to second guess my plan because I know the plan works. So to your question, so I lay this out in the morning for everyone, right? If you're a gold member or legendary member, you have access to it, right? You pay for that access. Every morning it's all laid out. Mark your charts up. Mike marks his charts up every morning in TV and posts them. You see the different levels. So then during the day, if you hit those levels, the only thing you need to have is a cheat sheet. 68.20 long. Profit target 68.40. The why is how you documented it to yourself in the morning. You can, if a trade doesn't work, always go back. What did you miss? What did you not see? Was the setup rushed? Were you too big for the trade? Sometimes, I say, let's see. Sometimes I say, small level, Or maybe, I say starting with initial profit target down at something, then holding a runner, which would be, smaller size. You've taken partial profits and done so. These are my plans of how I am going to demonstrate how things work. You have to do what's right for you. We can't give you advice on the specific trading. So you've got to manage your risk accordingly, et cetera. But the levels themselves are all part of the structure, literally in the morning. I mean, that's what this is. Learn to read this. This is the key. If you can read where the market's going to have pressure, I mean, these aren't just boxes we threw on the chart, right? I mean, this is when you finally get why these different levels exist. And to my knowledge, we're the only service that tells you these named levels and how they're constructed, why they actually exist, right? Why does transition exist? What is positive, plus trans or P trans or positive transition? What is negative transition? What does it mean? What's the area between them? What's drunken sailor upper, drunken sailor lower? What's the area between them mean? What's plus GEX mean? What's minus GEX mean? What's COI mean? What's minus COI or POI, excuse me? What does all that mean? Why is that important? Well, because these are areas where convexity changes in the structure. Market behavior follows the convexity. So if you can do that and identify that with the 68-20 strike, you know that, moneyness matters. Therefore, I'm going to likely melt upward. I know we had Captain Condor. I know it was the biggest expiry ever. Yeah, baloney.
It was.
Yeah, baloney. That's
Let
all.
me add my trading view chart to this stage.
Yeah, it's the last part of this, right? Beating a dead horse.
Sorry.
No, I've been beating it too. Or just making sure it's sufficiently dead here.
Kill it.
Yeah, exactly. Yeah. So going back and reviewing the day is helpful, right? Like, I find that one of the best ways I learn. And so people are going to say it's hindsight bias. Like, whatever, don't care. Like, why do all the NFL teams, why are they going to watch film of the game that just happened? Like, that must be a waste of their time, right? With that logic. So it's actually not a waste of their time. It's exactly why they've been doing it, and they will continue to do it. And that's why we should be reviewing how price interacted around key levels or did not interact around key levels, what the volume tool told us on the day, what the new tools were telling us on the day. So, all that to say, making sure that you're going and doing your work right, because Paul writes the plan, but it's going to take you a little bit to internalize that plan, right? And all that good stuff. And just because the plan doesn't work out one day doesn't mean that we're going to abandon the plan, because over a series of 1,000 trades, we know that it works. So again, that's where it's important to do the work, review, develop a system based off of it, figure out how to do your own game plan before reviewing Paul's game plan or my game plan or whoever writes it, and then compare the notes and figure out, okay, I disagree for this reason, or okay, I missed that. Let me update my plan, right? Because until you can, start to teach other people it, there's still work on your end to learn it. So, and we understand that, this is kind of a new way of looking at the market for a lot of people. And we're here at 8:45 on a Sunday talking about this. We're in the Discord at 7 a.m. until, 10 p.m. most days talking about it too. We have a ticketing system with approaching 800 tickets from people. So it's not, we try and make ourselves available on any and all avenues to help you guys understand this stuff, because options only becoming a bigger part of the market. Even if you trade or don't trade options, understanding how folks are positioned in the options market is important. So
tail wags the dog, right?
Yeah. So
tail wags the dog. Yeah. I know Mike wants to talk a little bit about what he's has here, so I won't say anything, but get to the point. I mean, our goal is not to just keep producing these and just spoon feeding you. That isn't why we publish, either the swing game plan, the MTM game plan, which is a market trend model, the SPX game plan. We want to show you how we approach it with these tools. And we have many people who have taken our approaches and they customize them to their style of trading. If you're a credit seller, great. If you like to buy out of the money options, great. Who are we to, if you're a spread buyer, how do you do that? But get in the mindset, I'm going to publish my plan for all of GammaEdge to see. Because that's the standard you hold us to. And we have to do it. And then you can judge us instantly. Are we right or are we wrong? Or are we, kind of in the middle of the zone? When you get to that point where you can actually publish this stuff, we have a whole channel to it. People just write done in there, which is the first step, right? At least they've got a plan. Publish your plan. You get so much better as a trader. You really do. All right, Mike, I'm sorry. I didn't mean to take your thunder there.
No, you're good. I was just showing, the only thing I added was this 6,800. This is a pre-market chart that we went over in pre-market prep on Friday. DS levels, it's labeled 0DT levels, 6,820. So yeah, long versus 6,820. Yeah, it was choppy around DS. I used SPXL, just entered, and that way I didn't have to watch it. And so I was busy on Friday back and forth. So I didn't use options. I just used leverage ETF, but and we touched 6840. So, but anyway, this was the exact plan.
No options, but still leverage.
Hey, you got to get your leverage somehow. I didn't have to watch it. Perfect stops. Yeah, but CT was great too. CT was still rising, right? And on TradingView, I mean, it was. There was no reason for me to exit the trade, I guess is what I'm saying. With Vol-M, the spec C commands that were just talked about, and our game plan, I don't know. I just, it is what it is.
It was fun. It was a fun day.
Yeah.
It actually was a fun day. I mean, sometimes you're like, damn, the market's selling off again. I'm on the wrong side or whatever.
Yeah. So, and I throw a little TA in there, just a little. I mean, this is a consolidation pattern, BCP, whatever you want to call it. It broke out of that, ran right up to 6,820. Prior day high, probably an area you want to watch. Match DS also, 0DT transition, lots of psychological level there. I mean, so yeah, it matches everybody's trading style. A little bit for some, a little bit for everybody.
TA is absolutely appropriate because the market trades TA. Yep. They do. Yep. They trade fibs. They trade crossing moving averages. They trade slopes of the 8, the 13, the 21, the 23, the 35 or 34, blah, 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 blah. Whatever.
Yep.
You do you.
Yeah. Use our approach with your stuff. And
it's absolutely.
Yep.
Yep. At the end of the day, what works for you and what makes money. Like if it's staying on top of your head and doing whatever, then that's fine. But the last thing we can do before calling it a night probably is just going back to what Paul was saying about, posting your own game plan. Like, hopefully we cultivate an environment where you feel comfortable posting your game plan or commenting about everything, commenting on a trade, asking about advice, whatever. And if you're not, then you're not going to get the full benefit of the membership, right? I'm just going to tell you that right now. And if you're too scared to post, like at the end of the day, that's just something that you're going to need to overcome, right? Like a lot of us were probably not going to meet in real life. So like ultimately who cares like what we think about? Like most of us are just going to be shoulders and heads to each other. So that's fine. Okay. But if you have a fear about posting online or posting in our Discord, like open a ticket and let's talk about it or whatever. And, we can start privately and then hopefully work our way up to publicly. But the greatest things that have happened in GammaEdge is because of the public Discord we have in there and members offering up suggestions and all that good stuff. So, ultimately GammaEdge is only going to be as good as our future development because the markets are evolving. We need to be evolving our things too. And GammaEdge is, the 3 people here. So, and there's, hundreds of people in the community. So hopefully out of the hundreds of people in community, someone, has a good idea out there that we haven't thought about, evolution of a tool that we have, and hopefully they speak up about it. We'd certainly appreciate it.
Yep.
So with that, seeing if anyone has any, last minute questions, anything we talked about tonight, you agree with, you don't agree with, we can elaborate more obviously throughout the this coming week. Last thing I will show you is, I just want to make note of it real quick. So throughout the day, right, there's a ton of good conversations that happen in trading chat. And by the nature of trading chat being the main chat, they just get lost in the ether. And so what I've been doing is, right, when I'm looking at the Discord, when I have time, as I scroll back through what's happened, I'll go in and I'll put in technical questions, just linked to where just the title of what was discussed, a link to where it was talked about. And the reason I do that is because I find it important. And so if I find it important, it's probably something worthwhile for you guys to go read as well. So yeah, I just wanted the key ones from last week were, someone asked how we could predict the sharp bounce. So we had a long conversation about that. And the other one was kind of just a good overall summary of what something Paul wrote on kind of the strategy and the mindset behind trading 0DT. A lot about we already talked about this tonight. But, it's just a good kind of blog post, for lack of a better term.
Yep. Yeah, Jim's asking, wonder if the OI scan can be run in charts, if it can be incorporated. I think the answer is that. But just remember, Jim, OI doesn't change during the day, right? You can get volume changes during the day. But the OI levels themselves, once they're run, and they are run in the liquidity channel, by the way, we run them every day automatically for the stocks and the ETFs that are in the liquidity channels. So about 29 or 32 different channels there. It's all automatic before the open. So OI is in there. I understand what you're saying. Now, I think what you're asking is, can we incorporate the CBOE data such that we get intraday changes that are appearing on the strikes and can either persist for the day or not? That's not the OI charts. That's a different set of charts. And we have the CBOE subscription, and we're looking at things. So I'll leave it at that. Yes, it is the total overnight change. And I think what you're asking for, perhaps you want a different display. If you do, open up a ticket and give us some ideas of what you're looking for. I mean, we have the data, obviously. The $OI, gives us between 2 selective dates. If you want more, then we can talk about what that is. Okay.
Yeah. Yeah. I mean, the last thing I'll say, a lot of people get hung up on the flow and all that good stuff, but like volume commands are awesome, like, again, it's showing you how people are actually transacting. Like, yes, we're going to be coming out with the unified Delta heat map and all that good stuff. And that's going to be helpful. But the volume is, yes, I understand it's only volume, but right, it still has a ton of information in it. And so I feel like we're really leveraging it well. And yes, again, I just know a lot of people get hung up on, the changes in open interest, intraday, and all that stuff. But like at the end of the day, volume, the manifestation of volume and how people are speculating and the trends of that volume, prove their value day over day over day. So, and I know a lot of people, I think we're the only people that really focus on volume. No one focuses on volume. They all poo-poo volume, really. So,
at the end of the day, it's only volume and price, right?
Yeah, exactly. Volume is what. Yeah, open interest. Open interest is a derivative of volume. So.
No, I think that's right. And just to put an issue, we've been raised in the stock world or the ETF world, the common shares world. That price and volume are really the only two. If you go back to all the great traders of the 20th century and look at what they're doing, certainly that's the case. We are in the middle of a new evolution, and I think this concept of structure is incredibly important because the leverage does move the common stock around or the shares around. And so I do think we're adapting to that with what we've done here. So by concentrating on options volume, which is still volume, you really do get to see a lot of what's happening here. So I think we're bringing a new component to the table that's just as notionally significant as dollars times intraday volume because of the leverage that's involved. So I'll leave it at that.
Yep. All good. Well, appreciate everyone's time tonight. Hope you guys have, a good holiday week, all that good stuff. Spend time with the family, spend time with friends. Again, markets, it's going to be a half week or whatever. It's slower volumes. But again, don't get complacent because we know back in whenever it was like 2018 or 20 when VIX freaking went to the moon on Christmas Eve. So things can happen. So with that, y'all have a good night, and we'll see you bright and early in the Discord. So, Adios. See y'all.
See ya. Thanks.